All right, I'm here with Adam Warner. Adam goes by AG Warner. That's at AG Warner on the Twitter side of things. A lot of you may know Adam from his time writing you've written for Street.com, you've written for Minionville, I believe, for some time.
Yeah, I'm actually the options editor of Minionville.
Right. And so you're still involved. You're still involved with the Minionville guys, with Todd O and Todd Harrison.
Yeah. I'm on Minionville. Also, my site is dailyoptionsreport.com.
So www.dailyoptions.com is your updated
Daily
blog.
Options Report. Dailyoptionsreport.com.
Dailyoptionsreport.com. And again,
Yeah.
I'm sure a lot of people over the years have read your work and probably profited from many of the ideas and trades that you've had out there. I know I have. I mean, I've been doing this. I've probably read about you, known about you, and we've been talking for years. But I mean, I've read about you probably going back to even before Street.com. Weren't you doing some stuff out there, as far as the research side of things?
I was an Amex trader before that. I was an options trader on the American Stock Exchange. That coffee looks good.
So you trade on? Yeah, thanks. You traded on the old Amex in New York.
Yeah, I was a market maker there from 1988 until 2001.
And who did you work for when you were in those 13
I was a proprietary trader.
Independent?
Yeah, basically that back then you could just
buy a seat?
You would stand in a crowd and really take the other side of order flow. And before all the automation and all the dual listing of everything, you really had your own markets to yourself, and you would have decent sized spreads, and you would try to buy everything on the bid, sell everything on the offer, lean against orders on the books. It feels like another world now.
It is a different
it's penny wide and traded everywhere, but it was just a different world. Your options weren't as liquid then as they are now, so you didn't do as many trades. But the trades you did tended to be good.
Did you ever trade with Roger Lowe of Parallax?
Roger, yeah, he was like the legend on the floor. He was not on the floor itself that much. He was like the first guy to sit upstairs and take order flow. And
yeah. So I worked.
Nice guy.
Yeah, I worked for Roger and the Parallax Fund for a number of years back in 2000, 2002. So he's out in San Francisco now. But I mean, I love all the stories of Roger and how he initially took too much risk, blew out and came back. The exchange basically said, we know you're good for it and you're going to earn it back, and he ended up earning it back in a month or two. And from that learning experience, he really and he really is a gentle person and a great teacher, especially in your business and the options game. And again, I spent a pretty big chunk of my life doing similar things. So let's go back a little bit, Adam. Where did you grow up? What types of things did you like to do? Did you like sports as a kid? Were you into music? What did you do?
I grew up in suburban New Jersey, and I actually live about half a mile from where I grew up now.
No kidding.
But I love sports, still do. Big Giants and Mets fan. I'm not going to I guess I just readily admit I'm a Mets fan. That's kind of embarrassing these days.
So let me ask you, I always use the Mets. And I was talking to another guy in Toronto the other day about how Toronto's trying to get a new, hockey team, kind of like the Mets were to New York. Get a secondary team, and obviously you were young when the Mets came onto the scene. So what was it about the Mets that you preferred over the Yankees as a young kid? I think there's a tie-in to trading at some point down the that formed your personality.
I guess I started rooting for the underdog at some point. I was a Yankee fan when I was little, maybe until I was like 10 or 12.
Yeah.
And I think I was a Yankee fan until they got rid of Reggie Jackson, and I didn't like that they let him go. So then I think I switched. I was always a Mets fan. But back then they never played, so you could really root for them both. That was only about maybe mid-'90s where they started playing and the rivalry became really intense.
Right. So
it was a Mets family, and I didn't really even think about the Yankees.
Right. And so you growing up, I don't know about you, but I grew up in Detroit, and that's our days consisted of going out. Hockey town. But it was also I grew up in the 70s when with Norm Cash and Al Kaline and all those guys, and the Tigers really sucked until my senior year in high school in 1984 when they finally won it all. But from '68, I was too young in '68 when Denny McClain and the Tigers won against.
Yeah, I don't remember the Mets '69 either.
Yeah, so But I grew up, basically going outside, playing baseball all day if it was baseball season, or playing football. Basically, baseball and football were the sports we played. And we played some basketball, but we basically played in the fields from the time we were out of school until the time our parents called us in. I don't know. Did you grow up with that same type of,
Yeah, we used to play. We used to pick up football games all the time.
Yeah.
There's a school right nearby, and
Yeah.
used to love to do that until I guess I got a little older and then pulled a hamstring every time I played. I'm an avid biker now. I bike all the time.
Are you a road biker?
Yeah, I go. Well, I'm trying to do a sprint triathlon next month.
Really?
So I've been. Yeah, I love the biking still. I was not a runner. Nor am I a runner now. I just want to finish it.
How about the swimming? So a sprint triathlon.
The swimming's fine. The swimming's actually great, particularly in the heat. But and the biking's been fine. The running is just torturing.
So a sprint triathlon, is that like 25-mile bike, 6 runs?
This one's a 14-mile bike. Well, actually, start at 800-meter swim in a lake.
Okay.
14-mile bike and a 5K run.
Okay.
So
that's pretty good. I tip
I'm
the
hoping
hat.
to finish. That's my goal.
That's awesome. I tip the hat for guys that try it because I've done 10Ks and I've done some bike races, but swimming I sink like a load of potatoes because I
It's funny. That's what everyone says. The swimming's hard. I don't find the swimming hard. I find the running. I just can't run.
Running's painful also for 240-pound guys. For me, it's not fun. I mean, I haven't run a 10K since I was probably 25, and that was 15 years ago. So, yeah, it's running obviously doesn't work well. I prefer to run on small squash courts. That's about the extent of my sprints. So.
Yeah, if I sprint, I would pull every muscle in my body.
So high school, did you play any sports in high school? You played as a young kid, did you?
I played basketball up until I was, I guess, in high school.
Yeah.
And soccer. And
how about games? Were you a game player as a young kid? Did you love playing Monopoly? Did you love playing Risk? What kind of games did you play?
I like all games.
Yeah.
Card games also.
I mean, were you were into them as a kid? I mean, I'm trying to find out.
Yeah.
So you go through high school. You play a little basketball. You love playing the games. What got you going? I mean, what inspired you as a kid? What did you go to? Did you go to college?
I went to Johns Hopkins.
And what did you study?
I was an economics major. It's funny. Hopkins is it's all it's predominantly pre-med.
Yeah.
So most of the kids are science majors, but
right.
or lacrosse players.
Exactly.
That's our two products. So there weren't that many economics people.
So I studied economics also at Michigan. I studied history. I've got a double major, but dismal science. I mean, I was through my major, halfway through my junior year, and I was like, I hated that. I was done with it, but I really hated it. So I decided I'd taken a bunch of history classes and kind of finished those off. And then I stayed a fifth year and took 28 credits of non-degreed accounting. I thought I was going to go and be a CPA. Hated it. So there I am at the end of the school, and I ended up going into sales. I actually got my Series 7. And again, gathering assets was not what I was cut out, so I ended up going into medical sales. What did you end up doing with your economics degree?
Well, it's funny. I did interviews also for accounting and for actuary, but the job I got was for a firm called the Options Group, this is 1987, and they were they had an online option valuation service for all sorts of options like commodity options, currency options, bond options, this and that. But, online in 1987 was pretty, would look ridiculous compared to today. But it was just basically people would put their terminals in on their trading desks, and they would use our system to price, different sorts of flexible options. What was interesting in currency options, they were like the de facto standard for pricing. Like the negotiation between two firms they wouldn't negotiate on the pricing option. They would negotiate on the volatility. They would be like at the money pound dollar options. I'll buy it at 13 volatility versus selling at 13.2 volatility. And they would negotiate. They come up with the volatility, and then when they had a meeting of the minds, then they would go to our system and determine the actual dollars they would exchange.
Huh.
So it's kind of interesting. I never known how this market worked.
And did you ever figure that out? Because I don't know how that works either. I mean,
Yeah, it was just formula. You know, they're different formulas. They mostly use like a Black-Scholes sort of formula.
Were you dealing with big trading bank firms type, that were dealing?
Yeah. It was all the clients were big banks. Actually, one of my clients really stood out. He would just like question every little thing about, the pricing, this, that. It was Nassim Taleb, the Black Swan guy.
Oh, it was really.
He was running a trading desk then. I think it was maybe Credit Lyonnais, or it was one of the French banks. And
no kidding.
He was like literally the client that stood out. Just like he was so inquisitive about everything, and I guess that's why he's gone on to do what he did.
Was he? Looking back, was he doing kind of fading the market then? Also, was he doing things?
I don't know the strategies. All I was supposed to do was like tech support. And he knew more about my job than I did.
So you did that for how long?
I did that for about a year, and then I wanted to trade, and my dad was a trader. I had been a trader on the Amex. He wasn't anymore, and he said, "Oh, why don't you try this?" I traded a little on the floor one summer, so I said, "Sure." I figured I'll just do that, and then maybe try to get a job on the desk, but I ended up going to the Amex and started really liking it. Yeah. And ended up just staying there for 13 years.
And so you right away again leased a seat basically, or did you?
Yeah.
Were you working under somebody else? I'm always curious how people get into it.
My dad backed me originally.
Frank backed you?
My dad did originally.
Okay.
He was my first backer, and I did buy him out eventually.
Yeah. Well, that's cool though. Because it does. You either have to work under somebody and kind of be the runner. I had a lot of friends that went to, the SIBO in Chicago, and they ended up, they were basically, the guy taking all the paper. They started out being runners. They called them runners, and in Chicago.
So, I've done that a couple summers, and
so you'd already done.
Yeah, if my dad hadn't started me, I would have had to start. I would have had to do that for a couple of years first.
Right. So you were fortunate to be backed right away, and were you profitable right away? Again, you had a couple years on the floor. I'm curious. Talk about your progression there.
Well, I think it was like hit or miss. There were definitely edges on the floor, yep. But it says hit or miss. And then in '89, one of our options was U.S. Steel. And at the time, there was like all this Carl Icahn news.
Right.
He wanted to split him into, at the time, it was Marathon and U.S. Steel. And he wanted to split the two companies. The company didn't. So there was all sorts of up and back, and the options just got monstrously busy. And that was like our first real, that was my first time, that was my first like real winner, I guess.
So
just trading the order flow, all of a sudden it started to just pick up. And
so let me ask you, you were trading as a market maker, so you were again kind of acting as the VIG, making your living.
Yeah, you take the other side, but like it was a strange thing. Like they would keep selling us the same. They basically would sell us one part of a calendar and buy another part. So they basically made us leg into a gigantic calendar.
Right.
And it ended up being a good position to have.
Right.
So it was more luck than anything else that they kind of gave you a good position.
Right.
That's trading, and trading's a lot of like being.
Yeah, right time, right place, right size, right. So,
yeah.
but that, and you knew that at the time, though. You were cognizant of the fact that you got a big, stake there, home run, whatever you want to call it, that turned out to your favor. What were during those early years? What were probably some of the biggest lessons you learned down there? And again, you did have an edge, and so I guess to me, I look at something like that and go, you had an edge. That was your biggest probably tell that you took away from that was I have to have an edge in this game.
Exactly. I think the biggest lesson being a floor trader was if every so often you would get good situations like that. So it was more, if you want the best lesson as a floor trader in those days, was to not lose. It's seriously like it was. Don't take a step back. Just tread water for a while, and you're getting enough edges that eventually one of those is going to work. You basically could probably break even on your positions for a while, and then hope. The problem was you couldn't dictate your position. They would give you the position by virtue of taking the other side of order flow.
Right.
So you have to sometimes defend you because the smart money, then as in now, the smart money, they know there's bids for a company somewhere, they know news before you do.
Yeah.
So you wanted to try to not take a big hit when you were on the wrong side, and be there when you were on the right side.
Right. So again, a very different world, and most people are never going to experience that, especially now with
so different now.
The floor being gone. So 88 to 2001. When did you start transitioning upstairs? When did that happen in your career?
Well, I was a market maker in different crowds until about let's say so in 1999, the whole business changed. When we used to have exclusive listings, so like we were the only place to have cat options. We were the only place to have American Home Products options.
Right.
American Home Products is now Wyeth.
Right.
We had something called Fleet Bank, which was eventually taken over by Bank of America.
Mm-hmm.
We might have had 10 or 20. Varying points in time, we had different products.
Right.
And you would have the exclusive option listing, so you could. It's not like you made your markets really wide, but you had a spread, and no one could get into your spread unless you were there to see it.
Yeah,
in 1999,
license to steal.
Well, there's so much stealing, but it was like you just didn't have a competition.
Yeah.
In 1999, they duly listed everything, so we listed a bunch more products, but everyone listed ours. So, and now what happened is everyone had different markets. So, on your screen, also you had fractions then. It was before decimals.
Right.
So let's say you were 3/8 wide or a quarter wide on a quote. A broker would come in and say, well, they're offering an eighth better, in Chicago or, whatever. Right. So basically the markets went from like 3/8 or a quarter wide to like, a 16th, which they called steenths, or an eighth.
Yeah.
Yeah, it seems like a long time ago. And,
when I started in the game, it was the same thing. My buddies were at O'Connor, and that's kind of when I started getting into the business. Early '90s, mid '90s, and they were at O'Connor, and then Jenny broke off and started Peak Six. So yeah, that was that whole transition. That's why I'm always and it was tough, I think, for a lot of people to go from floor market maker to then you got all the exchanges going. The different exchanges, and it just became, like you said, flattened. Everything, the edges.
Yeah,
really
but what happened was, '99 was the tech bubble, so we didn't realize in August '99 that our whole business model was gone, because basically for another year, volatility was lifting, which is always good for a floor trader because they always sell you everything. They said just sell you calls over and over again.
Right.
So you didn't realize the fact you were doing the calls, for fair value, you didn't notice it because volatility was ticking up. And not only that, the stocks were, a lot of stocks were exploding. So you really didn't notice that the business was gone until, I guess it was summer 2000 when volatility started coming in for the first time and stocks stopped going up.
Right.
And all of a sudden you say, wait a minute, I'm not getting any edge to do this. Why should I sit here? Then you're kind of being a sitting duck. You're doing everything at fair value, and they're hitting you with call or whatever, and you just
you just
say,
why
do I want to do this? Why do I want to, for fair value, put on the opposite position of what someone else wants? Why don't I pick my own position?
Right.
But people start drifting away. I stayed another year after that. I left in 2001.
When in 2001?
Excuse me?
When? 2001.
Believe it or not, I was going to hire someone. We were going to do an ETF business, and on September 10th, 2001, the weekend before that, I said, you know what, I should just leave and trade off floor. And on September 10th, I told the guy, we're just not going to do this. I'm going to leave.
Really?
So I was still there 9/11.
Okay.
And I left maybe mid-October that year.
So talk about that. That obviously you were thinking about it already, but was that a major impetus for you to, walk away from it at that point?
9/11.
Yeah.
No, I made the decision. Over that summer I wasn't trading that much, and we were going to start an ETF. We were going to switch over to just doing an ETFs. At the time, you could, trade ETFs versus the basket, like trade, let's say, the semiconductor SMH.
Right.
And you could just, flick a button, and you would try to make, pennies buying the package, buying the basket, less than you were selling ETF, and vice versa.
Right.
And I just, over the weekend before that, I said, I don't really want to be in that business.
Yeah.
And so it was really just coincidental. And then 9/11 happened, and honestly, actually we were closed for 3 weeks, so I guess I wasn't there all that much longer after that. Because physically, the Amex is only a couple blocks from the World Trade Center.
Right.
So they shut down for about 3 weeks after. So we didn't open. I think maybe October 1st rings a bell.
Okay, so mid-October you leave, and what do you go to do at that point?
I started trading off floor. I leased. A friend of mine runs a hedge fund, and I used their. They had an office out here. Their main office is in New York, but they had an office out here that they didn't use much. So I just basically rented a room from him, and he was there about half the time, and other people were in and out.
You were trading were you trading your own money then, just your own book?
Yeah, I was just trading my own money. I started trading. On the floor, you get market maker margin,
right?
Which means you can take pretty big positions, but once you leave the floor, you're now a public customer and you're subject to the same margin as everyone else. So it's a different game. You trade much like a fraction of the size.
So talk about that transition. How was that for you? I mean, was it?
Well, by that point, because the problem on the floor is a boon to the customer. All the the automation, the tight markets. I don't know how people traded options before 1999 because you were giving away such vig every time you traded it. But
hey, just like you said, you got Talib calling you up. I mean, we used to do this even in the mid 90s. I mean, it was like he had some electronic stuff, and I was always upstairs, so I never traded on the floor. So it was either I was calling Mickey, Johnny, Mike, either in Chicago or New York, and like you said, I was calling New York, Chicago, and I was playing this game. Okay, what do you have? Okay, I'm going to call them back and find out. That's how it was for me at least.
For like trading operations like that, you could do it because you're getting shopped. Spreads that were floating around, things like that. And I actually tried that a little bit on the floor also, but it's kind of a hierarchy. You have to, the bigger ones and the ones that at the ultimate end of the extreme, like some people actually pay to see the orders.
Right.
So they see them first, and then there's like bigger players, and then I was sitting in a booth on the floor, so you basically were seeing them after everyone else turned them down. So at that point, kind of nothing trades.
Exactly.
So if you're going to do that game, you really got to be like at the front of the line. It's probably the best idea is to pay to see the orders.
Exactly.
But,
so
at the time, I don't know how that business is now, but
yeah, I don't know. It's got to be a whole different thing. So you go upstairs.
A decade ago.
You go upstairs in 01 and describe your trading now when you're prop trading your own book. Are you a directional trader? Are you a spread trader?
More of a volatility trader. Like I'll take more of an opinion on volatility than I will on a direction. Like I might say I think options are too fat here. I want to be a net seller. Or maybe I think they're fat, but I don't want to have open-ended, so I'll sell, spreads, stuff like condors, iron condors, things like that.
So again, to me, that's the Roger low risk, high quantity, volatility, heavy liquidity.
He was definitely high quantity.
And high quantity. I mean, but that's how you make money. That's how you make money, though. Yeah. So okay, I understand that. And are you still trading that same way? I mean, you still, you stick with what's successful, or do you branch out into different things?
You change. Market conditions change. I try not to be fixed on one type of strategy. Like right now, I think certainly indices implied volatility. Even though the VIX doesn't look so high, it's actually pretty high compared to the way stocks are moving right now. It's a pretty big. It's unusual to see this kind of premium. It's about. Implied volatility is in the mid-20s, and realized volatility, like this, basically the volatility of the SPX is actually moving is more like the mid-teens.
Teens, right. So explain to the layman what that means, because I agree with you. Volatility is low when you look at stocks. Stocks aren't moving. But I agree with you. Most of the money I've been making right now, and I wouldn't recommend this to the amateur, but is selling these types of spreads. I mean, you're selling straddles, you're selling strangles, because they are so fat right now, and I agree with you. So explain what that means to the layperson, because these aren't the types of things that you learn, you learn this from listening to guys like you who do this every day, day in, day out.
Well, basically, let's say you sold a strangle on the spiders, which means you're selling. Where is it at 100 now? I'm not looking at the machine. Like, so let's say you're selling like calls above the market, say like with 102, 103 strike, and puts below the market, you're like 97 strike. Whatever. You're getting a premium for that, and the options decay in value each day. So if nothing happens, you would make money. But you can't say nothing is always going to happen. So what happened? The S&P, even though it's not moving that fast, does move in one direction. So on one hand, you're making money as the options decay. On the other hand, you lose money as, let's say, it goes up. You start getting short. You start having short exposure. You could have started this 10 points ago also. So you start getting short exposure. So it's not so simple as just selling it and putting your hands over your eyes. You got to also defend it. So let's say you sell it, you might have to, buy some spiders on an up day, sell some spiders on a down day, and so on, and you lose a little money. And the idea is
cutting
you want to make more. Right. So the idea is you want to make more money. You let's say you get whatever amount of money. Let's say, just picking a number out of the hat. Let's say you sold $10,000 worth of strangles. You would then. The idea is to lose less than $10,000 buying and selling SPY over the course of between now and whenever these things expire.
Right, trading it around.
And that's basically betting against volatility. And if you had been doing that, it would have done well because realized volatility is in the past, and we know now that realized volatility was pretty lousy for the last month or so.
And do you have
Ben, you don't know going forward. It's implied volatility estimates forward, realized volatility looks backwards, so you don't know where realized volatility is going to be going forward.
Right. And do you like to look at what's the typical
hey, I hate to cut off. We have company coming, and they're here now.
Okay, 3 more minutes, and we'll wrap it up.
Sure.
What's the typical time frame that you look at on a trade? Are you looking at within a month? Are you just finishing off your August positions now that?
I don't trade out more than 2-3 months.
Okay.
I stick to near months. I think when you go longer, you're betting. You don't realize how significant a relatively small volatility move is to a longer term option, and they're very hard to estimate. They're very hard to game. Yeah. So it's just kind of not a bet I really want to make.
All right, a couple more questions. Worst trade, best trade.
Worst trade, oh God. Well, worst trade on the floor, one time we had an option called PDX, Pediatrics Medical.
Yeah.
And this thing's a nightmare. They would come in and buy puts from us sometimes. So you sell some, you never get short stock, you never get anything bearish off. And the next day, there's some news comes out and the stock loses like half its value.
Yeah.
It's just like you're writing them a check.
Right.
that was easily. I mean, this trade was 10 years ago, and I still have nightmares about it. It was just like it was so far and away the worst trade I've ever made.
Yeah, I remember that name too. It used to be crazy too. Yeah.
Yeah, and also just in general, you can make really bad volatility bets. Volatility, you think it's doing nothing, and all of a sudden, like, it moves, and you just have the wrong position. I mean, I can't think of one specific. It's happened, 50 times.
Right.
Where you just have the wrong volatility position, and you just can't get out from under it.
Yeah.
So.
And how often does that happen to you? I mean.
Not so much off the floor because I don't trade that big.
Right.
But when I was on the floor, occasionally volatility would just move overnight, and you just had the wrong position.
You'd get lulled into this, pattern of nothing's going to happen, and all of a sudden 15% spike.
Yeah, like I had one of our options was American Applied Materials. Wait, I just got to get the door. I'll be right back.
Okay. You know what? So anyways, this is a good interview, good talk about options. Again, you're not going to read a lot about this stuff unless you're going to jump into bed with like a Larry McMillan book, which is the Bible of options. So if you ever want to get into some of the strategies that Adam's talking about, that Larry McMillan, I was just talking while you were away. If you want to learn some of these strategies, read Larry McMillan's book. It's the Bible on options.
Absolutely.
Yeah, so I was just throwing that out there. So
yeah, options as a strategic investment.
Exactly.
The Bible.
Yeah. So
anyways, one story I had one of our options was Applied Materials, and I think this was June expiration of 2000. And all of a sudden, just right after the expiration, July is a bad cycle to own in general.
Right.
Because you start getting crushed ahead of the slow summer. But just that Monday after expiration, volatility just came in like 10 points out of the blue or something, and there's just nothing you could do. It's just evaporation of your position. Right. There's no defense for it. That might be the single worst position I did to myself.
And would you say there's anything to learn from that, to avoid doing that in the future that you try to do, or is that just the cost of doing business?
Well, I mean, if you're not on the floor, I have this in my book. I have my book coming out soon.
When's the book out? Is the book out September, October, by the way?
It's out in about a month.
Okay.
And the time to really avoid going long a lot of options is, hey, bud.
It's fine. Don't worry about it.
Actually, I'm going to have to run.
Okay. Well, listen,
the time to avoid buying options is right at the end of a cycle.
Okay.
Don't buy the next cycle right at the end of the last cycle.
Yeah, wait a week or two.
Yeah, exactly.
Wait for a little evaporation. I couldn't agree more. Well, listen, tell us the name of your book. Have you named it?
It's called Options Volatility Trading.
Okay, and it'll be out on which, who's the
It'll
publisher?
be out in about a month. You can pre-order it now on Amazon.
So pre-order the book on Amazon, and I'm sure you're going to talk about it more on your site, dailyoptionsreport.com. We can.
I'm going to be shilling for myself so bad that.
No, it's great, and I expect to see a copy here at the trading desk. So I definitely want to read it. So you've sent me some bits and pieces, and I've read some of it, and it looks great. So I'm looking forward to it. Appreciate your time, and enjoy the remainder of your summer, Adam.
Thanks, you too. Take care.
Okay, take care.
Bye-bye.
Bye.